Look at your brokerage account right now and tell me if you actually have any idea what you are holding. You are likely sitting there with a massive chunk of your hard-earned capital exposed to a $22 trillion house of cards that the mainstream media is too terrified to even mention. Let that reality sink into your brain for exactly 3 seconds, because the raw truth is that you are living in a completely performative world where financial elites gamble with your retirement while you act like a spectator. You see everyone on the internet chasing high-yield private deals because they think it makes them look like sophisticated institutional insiders. But the reality is much more painful. I spent years in the trenches of the Big Four audit world, and I can tell you that management valuations are just creative fiction written by people who want to charge you a 2% management fee for the pleasure of slowly bleeding your account dry. Private equity was once sold to us as the apex of modern capitalism, where talented investors bought struggling businesses and transformed them into lean profit machines. But that model is dead in the water because the era of 0% interest rates is not coming back to save these over-leveraged corporate zombies. We are living in a landscape of high interest rates and tight credit where the only thing keeping these private equity firms afloat is their ability to hide the truth behind internal accounting. Imagine if you were allowed to decide how much your own house was worth instead of letting the open market decide. That is exactly what these firms are doing while they sit on $2 trillion of uninvested cash that they are desperate to deploy into failing deals. Just to keep their fee structures flowing, let us run the real math on your portfolio, because numbers do not care about your feelings or your status. If you park your $100,000 in a transparent low-cost index fund like VOO that captures the massive engine of the top 500 corporations in the United States, you are getting real returns determined by real competition in the global market. Now imagine you lock that same money into an opaque private fund for 30 years, with high fees that act like a slow-moving shredder for your wealth. If your private fund nets you 1% after inflation and fees your $100,000 becomes $134,784 over 30 years, that is an absolute disaster for your future quality of life. Now contrast that with a disciplined strategy in a broad market index fund targeting an 8% historical average return. Your $100,000 balloons to over $1,440,000 in the same 30-year time frame. That is a difference of over $1.3 million completely vaporized because you wanted to look sophisticated instead of being patient and data-driven. Most of you reading this are trying to impress strangers on social media, while your net worth is being cannibalized by institutional greed. I remember one rainy Tuesday morning years ago sitting at my chipped laminate desk, drinking a $2 bitter black coffee staring at a flickering monitor, realizing that my own financial future was only as safe as the systems I chose to trust. I chose the boring path. I chose to automate $500 every single bi-weekly pay cycle into VOO and VTI because I wanted to own the most productive assets on the planet. I did not want to pay some guy in a $5,000 Italian suit to lose my capital on a leveraged buyout that makes no sense on a spreadsheet. You need to stop being a customer of the financial system and start being a shareholder of the global economy. The middle class is being systematically drained by lifestyle inflation and a desperate need for instant gratification. You want the luxury lease on a German car, you want the $800 monthly payment, you want the shiny titanium phone that costs more than your monthly investment contribution. That is the exact trap that keeps you working until you are 75 years old. I drive a 2012 Honda Civic that has more personality than a boardroom full of private equity managers. I eat simple meals at home like beans and rice, and I track the macroeconomic data instead of checking for likes on a photo of a restaurant bill. You have to develop a callous disregard for what your broke friends think of your spending habits. Real wealth is invisible. Real wealth is an automated transfer into a high-quality dividend growth fund that compounds while you sleep. When you own SHD, you are betting on companies that actually send you cash payments every single quarter. Those cash payments represent real profit. They represent real products being sold in the real world. They are not some spreadsheet fiction cooked up in a private equity office to justify an inflated valuation. The bubble is going to burst, and when it does, it will be loud. But you will be fine if you are positioned in liquid productive assets that represent the actual output of the American economy. Stop falling for the marketing. Stop trying to chase the 100 times return that never happens. Embrace the boredom of dollar cost averaging. It is not glamorous to be right for 30 years while everyone else is chasing the next big failure. But it is certainly better than being broke because you wanted to look like an insider. Let us talk about the brutal survival habits you need to adopt to win this game. You need to build a defensive moat around your personal balance sheet. That means 6 months of living expenses in a high-yield account. That means 0 bad debt. That means aggressive contribution to your index funds regardless of what the news says. I bought heavily during market crashes when the headlines were screaming about the end of the world. I did not care about the news. I cared about the share price being on sale. If you are waiting for a perfect moment to invest, you will be waiting until you are dead. The market does not care about your feelings. The market does not care about your political party. The market only rewards the relentless consistency of people who understand the value of capital. Private equity firms are hoping you continue to ignore the massive cracks in their $22 trillion foundation. They are hoping you stay distracted by the performative noise. They are hoping you stay poor enough to keep playing their game. Do not give them the satisfaction. Take control of your money, audit your own life, cut the dead weight, and start building a future that belongs to you and not the institutional middlemen. Every time you walk into a trendy coffee shop and hand over $7 for a sugary drink with a fancy Italian name, you are trading away your future leverage. That $7 looks small today, but if you compound that exact amount daily at a standard market rate over a couple of decades, you are looking at a brand new car completely paid for in cash. You tell yourself that you deserve a little treat because your job is stressful and the corporate world is grinding you down every single day. But that little treat is the exact financial sedative they use to keep you compliant and dependent on your next bi-weekly paycheck. They want you tired, they want you consumer-driven, they want you completely distracted by flashy digital entertainment. Think about the last time you upgraded your smartphone, even though your current device was working perfectly fine without a single scratch on the screen. You spent $1,200 on a new model because the marketing campaign told you the camera had a few more pixels, and the titanium frame looks slightly sleeker. That is pure performative consumerism because you are buying the optic of being a tech-savvy modern professional, while your investment account is completely bone dry. If you took that same $1,200 and slammed it directly into VOO on a random afternoon, you would own a piece of Apple and Microsoft and Amazon, instead of being their financial hostage. Let us talk about the absolute reality of real estate, because everyone tells you that buying a massive house with a manicured front lawn is the ultimate American dream. You sign up for a 30-year mortgage that consumes 45% of your take-home pay because you want your parents and your high school friends to see that you made it. You spend your weekends walking around home improvement warehouses, buying expensive patio furniture and designer light fixtures to fill up rooms you do not even use. Meanwhile, you are one corporate restructuring away from complete financial panic because you have exactly $2,000 left in your emergency fund. That is not a dream. That is a gilded cage built on optical illusions and financial vulnerability. I remember sitting in my tiny studio apartment with a leaky radiator that made a loud clicking sound every 20 minutes while my friends were signing leases on luxury high-rise apartments with rooftop pools. They were posting pictures of their city views while I was tracking the historical dividend payout growth of legacy companies on an old spreadsheet. They looked like corporate superstars making $100,000 a year, but their net worth was less than zero because their lifestyle completely swallowed their income. Today, those same friends are trapped in golden handcuffs, panicking over every single performance review because they cannot afford to miss a single week of work. Meanwhile, my automated index fund portfolio quietly ticks upward, generates passive quarterly dividends, and gives me the ultimate luxury, which is the power to say no. You cannot buy freedom at a luxury boutique, and you certainly cannot find it by copying the spending habits of the middle class. The middle class is completely broke because they are trapped in a perpetual cycle of performative consumption, trying to look wealthy to people who are also broke. Break that cycle right now by automating your investment contributions the exact second your paycheck hits your account. Do not wait until the end of the month to see what is left over, because nothing will ever be left over if you let your emotions manage your money. Pay yourself first. Treat your investment account like a non-negotiable bill that must be paid to your future self. When you automate $500 or even $100 every single pay cycle, you remove human emotion from the equation completely. You stop caring if the market is up today or down tomorrow because you are buying more shares when prices drop and building true equity over time. Look at the mega corporations that dominate the global economy right now because they do not care about your political opinions or global diplomatic ceremonies. They care about optimizing efficiency, cutting costs, and maximizing shareholder value across every single operational sector. When you buy a broad market index fund, you are instantly hiring the sharpest corporate executives in the world to work directly for your bank account. You are letting their relentless drive for profit compound your personal wealth while you sleep peacefully through the night. Stop trying to pick individual winning stocks or guessing which random tech startup is going to the moon next week. The statistics show that over 90% of professional fund managers who get paid millions of dollars fail to beat the simple S&P 500 index over a 15-year period. If the elite professionals with supercomputers and Ivy League degrees cannot consistently beat the index, what makes you think you can do it while sitting on your couch scrolling through social media? Accept the beautiful simplicity of indexing, drop your ego, and let the broad market do the heavy lifting for you. Let us talk about the specific mechanics of SHD, because people always ask me why I love dividend growth investing so much. It is not about the immediate yield today. It is about the consistent compounding of cash flow over a long time horizon. When a company increases its dividend payment every single year for a decade, it shows they have real sticky cash flow and a sustainable business model. You take those dividend payments, you check the box that says automatic reinvestment, and you watch your share balance grow without touching a single button. It is the ultimate financial flywheel where money makes money, which then makes even more money until the numbers become absolutely unstoppable. Imagine waking up 20 years from now and realizing your quarterly dividend distributions completely cover your monthly monthly housing costs, that is the moment you achieve real leverage in life because you no longer need to tolerate a toxic boss or a soul-crushing corporate culture just to survive. But you will never get there if you keep prioritizing short-term lifestyle optics over long-term financial security. You have to be willing to look ordinary today so you can live extraordinarily tomorrow. Stop buying clothes with massive designer logos on the chest because you are literally paying corporations to turn yourself into a walking billboard. True wealth is completely silent. It drives a clean, older vehicle, it wears comfortable, unbranded clothing, and it focuses entirely on asset accumulation. Think about the massive psychological peace that comes with having a year of living expenses completely secured in a high-yield cash account or short-term treasury bills. When the economy takes a massive downturn and everyone around you is panicking over layoffs, you can sit back and look for investment opportunities instead of worrying about survival. That stability is what makes you an actual superpower in your own life. Not the performative nonsense they sell you on the evening news. The media wants you constantly terrified or constantly consuming because an anxious population is highly profitable for big advertisers. They want you to think that global politics will solve your personal financial problems. But the truth is that no politician is coming to save your balance sheet. Your financial freedom is completely your own responsibility, and it starts with the unglamorous daily choices you make with your capital. The next time you feel the urge to spend money to impress someone or to catch a quick dopamine hit, remember the math we did today. Remember the massive $107,000 gap between a lazy 1% return and a solid 3% real return. Over a 30-year time frame, remember that $1.4 million balance built on simple bi-weekly $500 automation into core index funds. Drop a comment below right now and tell me exactly what performative expense you are cutting out of your budget this week. Tell me if you are ready to stop looking rich and start actually building wealth that lasts for generations. Hit that subscribe button right now so you never miss another raw, unfiltered economic reality check on this channel. Share this video with a friend who is currently burning their paycheck on a luxury car lease or expensive weekend lifestyle inflation. Stay focused, automate your capital, and stop letting the performative world play you for a fool. We have to be clinical about this because the math does not lie. The private equity industry is currently sitting on $22 trillion worth of assets that are being valued internally. Without the discipline of the public stock market, this is a massive red flag for anyone who understands how capital markets are supposed to function. When you buy shares of Apple or Microsoft or Nvidia, you are buying into a company that is being tested every single day by millions of traders across the globe. You are getting an honest price discovery process that reflects the true value of those assets. Private equity does not have that. They have a group of partners in a glass office deciding what a company is worth based on their own internal growth models and optimistic projections. That is not valuation. That is marketing. And as a former auditor, I can tell you that the difference is catastrophic for your long-term wealth. I have seen firms write down the value of their portfolio only when they are absolutely forced to by a bankruptcy or a total collapse. Before that happens, they keep the numbers artificially inflated to justify their fee structure. If you are an investor in these funds, you are essentially paying for a fake sense of security while your money is locked away for 10 or 15 years. You are sacrificing liquidity and transparency for a hope that you will outperform the market. But the S&P 500 has consistently crushed most private equity funds over the last 10 years, so why are you still paying those exorbitant fees? Why are you still letting institutional gatekeepers decide your financial destiny? You are buying into a lie. You are buying into the myth that you need to be a complex insider to build real wealth. But complexity is the enemy of the individual investor. Complexity is what the Wall Street machines use to extract your money. If you want to win, you have to simplify. You have to own the biggest, most productive companies in the world through low-cost index funds. You have to let the power of compounding do the heavy lifting while you focus on your own productivity and your own career. You do not need to be a genius to build $1 million in wealth. You just need to be consistent. You just need to be boring. You just need to be disciplined. Most of you want the shortcut. You want the 100 times coin. You want the secret real estate hack. You want the private equity deal that turns 10,000 into 1 million, but those shortcuts are just bait. They are designed to separate you from your capital. The only real shortcut is to start early and to never stop. If you start today and you put $500 every 2 weeks into a broad index fund, you are winning. You are beating 99% of the people who think they are smarter than the market. You are building a fortress of wealth that no recession can touch because you are owning the companies that define the global economy. You are owning the infrastructure. You are owning the software. You are owning the innovation, and you are doing it at a cost that is basically zero compared to the massive fees of private equity. So do not let the performative world distract you. Do not let the politicians and the media and the financial elites dictate how you spend your life. Take back your financial agency, take back your future, and start investing in the truth. The truth is that index investing works. The truth is that fees destroy wealth. The truth is that you are capable of building generational freedom if you stop playing their game. So hit that subscribe button, join me on this journey to true financial independence, and remember that the most powerful tool you have is your own discipline. Stop looking rich, start being rich. And I will see you in the next one tomorrow.